Why does boards ignore AI fines pose external existential risk to valuations? Because everything is an existential part at the moment, whether it's a product or a service. Now, with that risk, how do we look at boards looking at AI fines is what we want to understand from you.
Uh, so before I actually get into this, there was a case where a major ad tech company, primarily into advertisement technology, they lost close to, I think, 18% or something of their market cap
Okay.
when say the department of actually launched into an investigation into their undisclosed AI ad targeting violations. So this is something which, and then these are the scenarios which which cannot be avoided by board altogether, and can this is a kind of scenario where like one fine or a probe can actually trigger a stock free fall, especially if it's a listed organization. There's a penalty risk involved, which unaware of the legal exposure it can lead to some sort of strategic risks for the board. Then if we look at this, then if boards are not briefed on compliance, they can't act fast in the crisis. So if the board's ignorance of AI fines, and they're not kept in the loop of some of these things, then it actually erodes the trust of the analysts, the shareholders, and altogether the customers or the consumers altogether. So that's something which is having a higher implication on the existential risk to the organization itself, rather than just say a fine. So it's a very broad term impact to businesses if these kind of say compliances are not adhered to.